Good morning or good afternoon. Here virtually from Southwest Florida. We really wish that we could have been there for this Australian conference. We've been there a couple times in Sydney and both Melbourne. And unfortunately, due to the political season, since we have elections coming up, we are supporting a few candidates that could not make it. So we're going to do the best next thing and talk to you virtually from Southwest Florida. My name is Brad Koza and I represent the Southwest Florida Acquisition Team. And we actually also have Dave Helm that's going to discuss the property management side of the equation. But I want to familiarize yourself with the area and the opportunity at hand and why we feel that Southwest Florida is one of the best emerging markets for Australian investors to invest from a capital growth standpoint and from a long-term cap rate standpoint. So Southwest Florida, just to introduce the area itself, Southwest Florida has always been an area of hypergrowth. Hypergrowth in the sense of we're a newer area where we were involved in the construction boom in year 2004, 2005, and 2006. And that's what led to this type of crisis that led into an opportunity for our investors. What we were doing is we were one of the largest pre-construction investment opportunities when the banks were giving out as many mortgages as possible, and it was very easy to acquire construction loans. And the misnomer is in Southwest Florida, which is comprised of Lehigh Acres, Fort Myers, and Cape Coral, is the fact that people thought that the amount of population growth ceased. And that is the misnomer. What the situation was, and that led to this crisis, is the fact that we were building, for every single one person moving down here, we were building 5 single-family homes that were truly investment properties for the purposes of flip. So the inventory kept stockpiling, which led to a supply and demand scale that tipped in the favor of an excess of supply. So our market actually in some areas corrected 70 to 80%. Now 70 to 80% from its 2005 value, obviously we're now purchasing at bargain basement price points. And when you were looking at the 2005 values, most of the single family homes that were now able to actually sell turnkey to you as an investor, about $110,000 to $140,000. Those were selling and trading for back in 05-06 at $400,000. So as you can see, the opportunity is actually at hand to purchase. And the most important thing is we are now starting to see the supply and demand scale tip back into our favor as investors, and we're starting to see a price correction. So about a year ago, price points did actually hit rock bottom, and we've already seen and witnessed about a 25% increase in purchase prices because we did in fact hit equilibrium. So there's less foreclosures, less inventory, therefore price points are appreciating because the population growth in Southwest Florida, since it is a destination area, is continuing to increase, and the market is doing exactly what we expected to do. So out of all the market sectors, of course I'm a little partial since I'm in Southwest Florida, but I can pretty much bank on the fact that Southwest Florida is going to be one of your highest capital growth potentials within the United States of America, due to the fact that it is a destination area and we are still buying properties roughly about 50% below their reproduction cost. You're going to hear a lot about reproduction costs in this very abbreviated presentation, but reproduction costs, very simple just to go over, is if we sell a foreclosure on the adjacent lot next door to that foreclosure, what does it cost a builder, who builders are re-emerging in the marketplace as we can see, which we will address, what does it cost that builder to build that same single family home with a 2012 or 2013 model? And we believe that in the next 1 to 2 year period, that all of the properties that are existing, the 2006, 2007 properties that we actually sell to you as the investors turnkey after we renovate the property, will all be at least worth what that reproduction cost is. So if we can offer these properties at 50% of that reproduction cost, now you as the investor, in addition to the capital growth and in addition to the cap rate in which you're achieving, you're looking at a very large potential of doubling your investment due to the fact that we are starting to see builders re-emerge in the marketplace. So I'm going to go into the PowerPoint presentation and go over a few numbers